On this Thursday, the major U.S. stock averages are hovering above the flat line. Of course, we have the Fed Symposium taking place in Jackson Hole, Wyoming. So joining me on the trading floor is Peter Tuchman of Quattro Securities. Peter, great to have you here today.
Thank you. Thanks for having me.
Well, of course, it is quiet given summer doldrums, but we are keeping an eye on what the central bankers will be saying. Now, the Fed Symposium isn't always forthcoming in terms of bringing comments. So what do you expect to see?
You know what? I don't know that much about what's going to happen there. I think it's going to. We'll know a lot more once this thing pans out. But I think it's important to watch what the market's doing, which we have not seen for a couple of months. Which is basically really once again watching the Twitter sphere, watching the headlines, and reacting to it. It seems like any friction that's going on in Washington right now is sort of disengaging the agenda, and that's people's perception. Whether it's one person, a lot of people, or whatnot. But the market is sketchy. The market is fragile. And it's a little vulnerable. It's not to say that we have any big sell-off happening or any big rally happening, but we're trading in a sideways range. You know, momentary ups and downs are going to be headline-driven.
Well, Peter, it's hard to believe, but we have the Labor Day weekend coming up next week. So once everybody returns, let's talk bigger picture. In terms of the Fed rate outlook as well as what we can expect from Trump's economic agenda, what's your timeline and what do you think we'll see this year?
So it's clear that September, it seems like September's off the table for a raise, but I really think they will do it in December. The time schedule for the unwinding of the balance sheet seems to be important. I think that's going to start up in mid-September, and it will unwind into a strong market. I think that's a good thing. We did have a little blip in retail earnings, which is sort of a good thing. Nothing bad is happening except that nothing forward is happening. And so sometimes the market reacts to no bad news. I think we've seen that. We saw the rally the other day up 200 points. You know, we saw a down day the day before on the fighting that's going on and the friction and how that will affect the agenda.
And Peter, before I let you go, I do want to ask you about sectors. Now, you brought up retail, and of course that does come on the heels of the latest earnings reports. But earlier this week, we saw some defense names get a up move on Trump's comments. So what other sectors are you keeping your eyes on as we head into next week?
So I think it's fascinating to watch what's going on between the Amazon and Whole Foods and with Walmart and Google. Okay, I think, we're looking at it feels like Amazon's eating everyone's lunch on the retail side, but you did see some retail stuff come out today, which was Dollar Tree and Signet and Abercrombie. But this is scattered. I don't think I can make a judgment call on that. The whole brick and mortar idea with retail has been under attack, under siege. I don't think that's going to change. And the more the big guys get together, a Walmart and Google and an Amazon Whole Foods, I think it's a day at a time right now, because when a market's being driven by headlines, anything can happen. Now, does that affect quarterly earnings estimates and guidance? Absolutely not. But I think we have to see how the next couple of weeks unwind.
Okay, Peter. Well, great to get your insight today, and thanks for joining me.
My pleasure. Thanks, guys.
Thank you.